Hi, good morning. My name is Eric Levinson with VinaCapital, and today I'm joined by Andy Ho, Managing Director and Chief Investment Officer of Vietnam Opportunity Fund, VOF, and Portfolio Manager Con Vu of VOF. And today we're just going to give a quick update on the portfolio. Given the volatility in the global markets and in Vietnam, people have asked us questions about our current positioning and current outlook, and so even though it's middle of the quarter, we thought it'd be a good time to just share some insights with shareholders. So with that, Andy, we'll get started. Now, we don't have Michael and Ismail here, but so rather than do a full economic outlook, maybe in just a couple of quick minutes, could you just give your view on the Vietnam economic situation today?
Well, thanks, Eric. Vietnam has been very fortunate. We went through a period during COVID in 2020 and 2021 where the GDP continued to expand. And coming out of that, we feel that the expansion of GDP or growth of the economy continues to be very, very strong, running at a rate about 7 to 8% per annum. And we think this will continue for the next 3 to 5 years. And the important thing is what's driving this sort of economic growth, one of which is obviously the foreign direct investments into Vietnam, manufacturing goods for exports, for domestic consumptions. Recently, Foxconn, on behalf of Apple, have announced they will open a new factory to produce Apple watches in Vietnam. This is all good news. Lego's producing toys in Vietnam in a sustainable manner, all good news. And that's an example of FDI, and that's driving a big component of GDP growth. In addition to the fact that Vietnam is an agricultural or agrarian economy where we're producing and exporting a tremendous amount of food and foodstuff. Remember, 20, 30 years ago, we were importing food. Now we are a breadbasket of Southeast Asia. We're exporting food, and that's driving the economy in a significant way.
You know, one of the things that you didn't mention it, but we talked about this leading up to the call, is that, you know, while the GDP growth was great in Q2, will probably be even stronger in Q3. Corporate earnings have been strong. There's still a degree of uncertainty. There's not as much clarity with either Vietnam and certainly globally. Now, you've been in Vietnam for over 20 years. You've managed VOF since 2007. How has that experience of managing VOF the last 15 years, how has that prepared you to handle the next few years?
Well, I think your answers can be put into two components. One is, you're right, we are seeing a bifurcation of the stock market and the economy. Yeah. There's been a lot of volatility in, obviously, the stock market, and it's probably more of a reflection of global stock markets as well as domestic issues or challenges, if you will. But as I mentioned earlier, the economy continues to grow in a steady manner. Now, as for managing VOF over the last 10 to 15 years, I've seen a tremendous amount of changes. But more importantly, we've been through the global financial crisis. We've been through a period of time where Vietnam experienced a significant amount of inflation. And coming out of those challenging periods, we've been able to witness what's happening in the market, in the economy, and now we're more prepared, if you will, more prepared for the volatilities that we are facing now in the COVID and then post-COVID world.
Is that a Vietnam is more prepared, or Andy Ho, portfolio manager, is more prepared?
I'm not sure about Vietnam per se, but I think as an organization, as the team, we are we're more prepared. The team, I have to admit, have been together for almost 15 years now. A lot of the senior members, including Khan here, and our senior members on the private equity and public equity side have been together for many, many years. And we have a tremendous amount of institutional memories from these challenging periods.
So one of the things that we talk about, particularly the private equity portion of VOF, is your ability, whether it's because of the relationships you have, the experience you have as an investor, to really negotiate incredible terms, both obviously on the upside, which is the longer term, but also negotiating downside protection. So when we talk about uncertainty, you talk about downside protection now. Now, one question we get sometimes is, you know, many investors look at Vietnam as kind of the cherry on their risk sundae. It's an off-benchmark bet. How do you reconcile the risk-seeking part of getting to Vietnam and then hiring a manager who really makes sure that we have downside protection? Is that aligned?
Yeah, first of all, we are sensitive to the motivations of our investors investing in VOF in Vietnam. They want the higher return, and they're willing to accept, obviously, a higher risk associated with a frontier/emerging market. Having said that, we would continue to deliver that type of higher return, But like you just said, perhaps the cherry is not in Vietnam, but the cherry is in providing each of the investments with downside protections. And this is important because, again, we've seen a lot of volatility starting in probably the springtime of 2020. We were able to see globally what was happening in the market. And we said, look, that's probably going to happen in Vietnam as well. So our approach to private investments since then have been a lot more aggressive in making sure that we have some sort of downside protection. Now, whether it's in the form of a put option, a performance commitment, top up, various kinds of downside protection that allows the NAV or the book value of the investment to stay stable rather than reflect the volatility of the stock market. But having said that, I do recognize the fact that a lot of folks have asked is, are you sacrificing some of the upside potential? Now, I have to admit, we are sharing some of the upside potential with the sponsor, but on the other hand, we are actually having complete upside potential on all the investments that we make. But we are sharing some of that with the sponsors.
Interesting. And so having said that, maybe kind of I'll go to you. Are there any recent transactions in the portfolio that are worth highlighting to the people on the call?
Yeah, and to Andy's point about these downside protections, in the past 12 months, we've done about 400 million in deals, 200 exits, 200 million in investments. And if you look at those investments that we've made, almost all those investments have had some kinds of terms around it. What we call the private finance, the structured investments, those have these very characteristics that you talk about. And in the past 12 months, we've done about 70 million into the sort of consumer sector with those structured deals, and about 30 million in the real estate sector, again with these structured investments. On the public side, we've also put money to work, and again, a transaction like ACB, which we entered in late last year, that also was a privately negotiated investment, even though it is one of the top publicly listed commercial banks in Vietnam. We negotiated a position into that. So, over the past 12 months, we've been incredibly acquisitive in this environment. Also, we've done a few exits. I mean, one recent exit is Ngọc Nghĩa, one of the private equity investments, the largest PET company.
Yeah, we invested in the largest PET bottling company in Vietnam, and we've helped recap the balance sheet. They obviously have a lot of debt, and we helped them invest in new, more sustainable equipment, machinery and equipment. And we put in a stronger management, a more international management team. And as a result of that, we were able to exit our entire position of the controlling stake of the business to Indorama, which is one of the world's largest PET bottling producers in the world.
Interesting. Well, thank you, Scott. So, one of the other questions we have, so VOF is unique. In the universe, it's the only Vietnam fund and the only London-listed Vietnam fund that pays a dividend. And so, Andy, I'll ask you this again. It's kind of a similar question to the downside protection. Why is paying a dividend to investors important to you as a fund manager?
Right. Well, paying dividend, when we make the investment into the business, we expect them to pay dividend as well. We feel it's important for them to pay us dividend, and as a result, we feel it's important for us to pay our shareholders dividend. Now, what does dividend mean? It means the quality of earnings in a sustainable manner in the years to come is high. When a business fails or are unable to pay dividend, particularly in Asia, in Vietnam more specifically, it begs a lot of questions. And we rather have high quality management team, high quality businesses that have good cash flow and can sustain a long-term dividend program. And that's what we want to reflect to our shareholders too from a VOF perspective.
So kind of by making sure that you're paying a dividend to clients, it results in just a higher quality portfolio.
Yes.
Interesting.
And just to add to that, I think what's also important is that that dividend is consistently paid. So even though we've seen significant volatility in the market, every 6 months, this fund, because of the income that it produces, what Andy talks about, the portfolio companies are producing income, we cover our dividend, and I think that's really important.
It's not a return of capital. One of the things is, so people aren't here. We're here in Ho Chi Minh City, and kind of it feels like it's quote back. You go out, the restaurants are booming, the traffic is terrible. What does this mean for the private equity pipeline? Is there more deal flow? Are there more people coming in to look at deals? Are more companies now having a little bit more clarity post-COVID on what their cash flows are like, and they say, okay, now is the time that I want to either grow or exit. How is kind of the resurgence and the resilience of Vietnam impacting the pipeline?
Yeah, so the pipeline would be the supply side. It's very long, and simply because over the last couple of years, a lot of folks have been reluctant to raise capital, and obviously a lot of investors have been reluctant to deploy capital. And so it's accumulated in a situation where there's an accumulation of opportunities to invest in. And a lot of it has to do with, again, strengthening the balance sheet. And over the last couple of years, cash flow has been under constraint. And so these businesses are raising money now to strengthen the balance sheet and get ready for the next phase of economic growth. In terms of the demand side, those that have come in to invest in Vietnam, it's kind of odd. I actually had expected more financial investors to come to Vietnam and look for opportunities, but I have seen very little of that. What I have seen is strategic investors coming to Vietnam, right? Strategic investors seem to be coming at a much faster pace, whether they're from South Korea or even from Thailand and India. India has been playing a big pivotal role in Vietnam's investment scene.
Interesting. All right. Well, with that, kind of any closing thoughts for Khan or Andy?
Look, I think, it's quite obvious that we came into 2022 with this expectation of a great recovery. It's been a challenging first half, but the fund has been resilient. The investments that we make, the way we structure our investments has meant that we are performing well in this environment. And I think what's important is that we continue to seek those opportunities, privately negotiated opportunities, so that we can continue to deliver this long-term returns to our investors.
Yeah, I think, as mentioned earlier, there's clearly a disconnect between the development of the economy and the stock market. And I think it has a lot to do with the risk-off factor in the last couple of years. And but I think there's clearly an alignment of these two markets in the coming months and years. It normally is. In my 15, 20 years of experience here, there's usually a consolidation or alignment of those two markets.
Do you mean the economy and the stock market?
Yeah. And the other thing is that we are beginning to see a lot of foreign net inflow. Whereas before we saw outflow, now we're beginning to see foreign net inflow. And I think it's also on the back of the fact that valuation is very attractive. Our PE ratios on the lower teen, and earnings per share growth is showing to be very robust, and probably in the upper teens, in the lower 20s for 2022, and hopefully in a similar fashion for 2023. So with that, I do see a more stable market going forward in alignment with the macroeconomy.
Yeah. Well, Andy and Khan, thank you so much for joining us. And it's interesting. Here we are in the middle of the quarter, and one of the reasons we wanted to reach out and share this video was because, to Andy's point, we do believe that the disconnect between the strong economy and the market will eventually close. And so if you are thinking about reallocating your portfolios, whether it's this quarter or towards the end of the quarter, it's a great opportunity to think about Vietnam as your portfolio and either topping up or adding a new position, because you don't often get these opportunities where you have GDP growth and really strong earnings, yet the stock market really not cooperating. And so we do believe that will change over time, and certainly in the next, hopefully, few months. So again, thank you for joining us. If you have any questions, we look forward to hearing from you. Thank you.